Trader James Wynn has faced another significant setback on the Hyperliquid platform, this time involving a highly leveraged short position on the S&P 500. According to Arkham Intelligence, Wynn was partially liquidated on a trade with 50x leverage and now has only $2,600 left in his account. He still holds a $184,000 short position that was initiated around the 7,400 level of the index. This event is part of a broader pattern of punishing liquidations that have persisted over the past several months. On April 6, 2026, Wynn suffered his sixth forced liquidation within 2 weeks on Hyperliquid. That incident alone reduced his account to just over $900, representing a loss of approximately $20 million on that trade alone. Wynn's strategy has included shorting major indices like the S&P 500 and the Nasdaq, going long on WTI crude oil, and selectively buying Bitcoin dips with spot capital. However, this bearish macro positioning has repeatedly been punished as markets have moved against him. Since May 2025, his total losses have reached approximately $98.5 million, with a single weekend accounting for an $80 million drawdown. On at least one occasion, he suffered 12 separate liquidations in a single day. The risks of extreme leverage are clearly illustrated by Wynn's track record. At 40x leverage, even a 2.5% price move against a position triggers forced closure. During a sustained rally, short positions at this leverage can be wiped out within hours of being opened. At 50x leverage, the margin for error is even thinner. Hyperliquid has become. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. One of the most active decentralized perpetual futures platforms, and Wynn's activity there has drawn attention from on-chain analysts and traders alike. The platform's transparency allows for real-time tracking of high-profile traders and their positions, which has led to increased scrutiny of Wynn's strategy and execution. The broader implication is that traders using extreme leverage on platforms like Hyperliquid face heightened risk exposure, especially in volatile or trending markets. The recent performance of the S&P 500 has been particularly unfriendly to short sellers, as the index has continued to trend upward despite periodic corrections. This has made it increasingly difficult for bearish traders to maintain profitable positions, especially when using high leverage. Wynn's repeated liquidations suggest a combination of poor timing, aggressive positioning, and a lack of diversification in his risk management. The pattern of losses also raises questions about the sustainability of high-leverage trading strategies in a market that has shown resilience and upward momentum. As markets continue to evolve, the use of platforms like Hyperliquid for leverage trading remains a double-edged sword. The ability to take large positions with relatively small capital is a powerful tool, but it comes with the inherent risk of rapid and total loss. For traders who rely on leverage to amplify returns, even small adverse price movements can result in catastrophic outcomes. Wynn's experience serves as a cautionary example of how quickly a position can unravel when market conditions shift unexpectedly. The next signal to watch is whether the S&P 500 continues its upward trend or experiences a significant correction that could reverse the bearish sentiment currently dominating the market. If the index stabilizes or begins to decline, it could provide a window of opportunity for short sellers to regain ground. However, if the rally persists, traders like Wynn may find themselves facing further losses and potential full liquidation of remaining positions. The mechanics behind these losses are clear. When a trader opens a leveraged position, they are essentially borrowing capital to control a larger amount of assets than their account balance would otherwise allow. In the case of a short position on the S&P 500, Wynn is betting that the index will fall. But if the market moves against him, even slightly, the system automatically closes his position to prevent further losses. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. 50x leverage, a mere 2% upward movement in the index can trigger a full liquidation. This is why traders with high leverage are often the first to be wiped out in a market rally. Wynn's current position remains at risk as long as the index continues to rise. The stakes are high, not just for Wynn, but for anyone using similar strategies. The next few days could determine whether his remaining position is saved or wiped out completely. If the market shows signs of a reversal, It could give him a chance to breathe and potentially reverse his losses. But if the upward trend continues, it's likely that Wynn's remaining capital will be wiped out entirely, marking another chapter in a long and costly sequence of liquidations.